Welcome to Real Estate Coaching Radio, starring award-winning real estate coaches and #1 international best-selling authors, Tim and Julie Harris. This is the #1 daily radio show for realtors looking for a no BS, authentic, real-time coaching experience. What's really working in today's market, how to generate more leads, make more money, and have more time for what you love in your life. And now your hosts, Tim and Julie Harris.
Welcome back. This is day 2, and Julie and I are sharing all of our 2025 real estate predictions with you. Now, you want the notes for today's show, you want the notes for every day's show. The only place the notes are available for you are going to be over at harrisrealestatedaily.com. So remember, if you're not yet a subscriber, it costs you nothing, and it takes about 32 seconds to become a subscriber. Just go to harrisrealestatedaily.com, drop in your email address, and remember, the second part is critical. You have to then pop over to your own email and confirm that you want the subscription. It's double opting in because we only want the people that are most serious about getting the notes, receiving the notes. So just go to harrisrealestatedaily.com, and that is where you'll find the notes, all of our predictions, and all of our previous notes, of which we spend a lot of time on every single day. Julie and I calculated we're probably spending an average of 10 hours a week creating these notes for all of you, and we're doing it obviously to keep ourselves organized, but also we're doing this so you can use this as a reference. So harrisrealestatedaily.com. All right, Julie, so we talked about the points, our prediction 1 through 5 yesterday. Let's jump right in and let's talk about prediction number 6. And some of these are self-evident, especially if you look at what we talked about yesterday.
All right, point number 6, and this is my personal favorite, inventory growth. More options for buyers. Housing inventory is projected to increase by another 11.7%. I say another because year over year right now, as we're ending 2024, our inventory is up 23% over this time last year. So this almost 12% is predicted to be even higher going into next year, which is indeed the highest since 2019, which was the last year that was considered anything near normal. All right, both resales and the surge in new construction drive this growth. More homes on the market mean fewer competing offers and a higher likelihood of getting buyers into contract. That translates into more sales for you, our listeners.
Well, scale that too. So obviously there'll be, right now there's maybe, 10 buyers for every one house. In some markets, it's like 1 buyer for every 1 house. And, you guys get the idea. But all that's going to start shifting. And in 2019, there was an average days on the market in most markets. It was probably, I think, 90 days. And so you had the opportunity to, generate other business from the listing and maybe have multiple contracts, but rarely were things selling for over asking price. That was sort of an anomaly. And we're getting back to more of a normal market. In other markets like Austin, you're going to see, frankly, more of a buyer's market. So adjust accordingly with all of our predictions. But the bottom line is, we're going to start seeing a real leveling off of this lack of inventory. New construction to the rescue over the next 5 to 10 years. You guys are going to see new construction is going to play an enormous role in the long-term housing markets, in your market especially, depending on availability of land. We talked about this yesterday. We talked about the effects of deregulation of housing. We talked about the fact that you're going to see, even in these markets where they have a lot of, essentially NIMBYism, not in my backyard, you're going to see a lot of those types of markets change their rules and regulations. And so nothing but blue skies ahead for those of you who are frustrated with trying to find inventory for your prospective buyers.
That's right. And keep in mind, with the increase in new construction, those of you who have resale listings or will have resale listings in 2025 that compete against that new construction, that means one of the changes that you'll have to go through is being better at pricing and being aware that that new construction generally kicks the butt of resale unless it's a rehabbed resale at the same or less price.
Well, so to Julie's point, even if the new construction is more expensive, if the payment is lower because the builders are essentially buying down interest rates, then guess what most buyers are going to do? They're going to buy the new construction and get the lower payment. We talk about all of this stuff obsessively, I would say, in Premier Coaching. And if you're not a Premier Coaching client, make sure you do not delay in becoming a Premier Coaching client. Just go to premiercoaching.com or click the link below and you can join Premier Coaching right now for free. And Julie, I want to tack on another, I think, a bonus point to number 6, 6A, let's call it. You're going to see in most markets one of the biggest opportunities ever to become a listing agent because there's going to be so many expired listings. That is what's definitely going to be one of the biggest opportunities that probably we'll be talking about 2025 at the beginning of 2026. How many agents for the first time were able to learn how to be listing agents really, I think, consistently because they learned how to hunt expireds. You just picked up a new coaching client, actually.
Yes.
And he was a relatively a new agent. Well, he was not a new agent, but he was new at calling expireds.
Yes.
And he used RedX to dial. I think he made 700 dials. RedX did the dials for him. He made, if I remember correctly, he created 30 leads and he set 11 listing appointments.
Yeah, pretty good ratios.
I'm pretty sure those are the ratios, yeah. And by the way, RedX is the system that we suggest you guys use when you're looking for RedX or when you're looking for expired phone numbers because they do all the work for you. And the link to RedX is in the show description, or you can just obviously text the word RED, R-E-D, to 47372, and they'll text you back a link, or we'll text you back a link. You can join RedX and get a $150 discount.
Yes, that's right. Now, just to clarify, because you said something that might cause some of them to get hives, you said 900 dials, okay? That's using an auto dialer. There were 31 connections. Those are actual conversations. So don't feel like you've got to actually dial yourself 900
basically,
times.
I think even use more factual words. Essentially, there were like 700 or 900, I don't remember, expireds.
Yeah.
Okay, and he attempted to call all of them.
Right.
And from that, he made contact with. He didn't keep track. Okay, but then of the ones he kept track of, he created 30. I think it was like 30 or 33 leads, and then from that, 11 appointments were set.
Yeah. So this was over the course of a couple weeks.
Right, and he only tried to call. Actually, I don't think that's right. I think he did this over like 2 days.
Okay, not very much time is the point.
Exactly. And of those 11, he and I were, I was helping him to understand of those 11 expireds that he set appointments for. He's in the process of learning how to pre-qualify them and all the rest of it that we teach in Premier Coaching. But the moral of the story is he's probably going to take 3 or 4 with no experience, with not even using a system, but he was making the effort. He's, making the calls, doing the work, starting to really do the work at a higher level. But imagine, guys, you are doing the same thing in your marketplace, and the same opportunities certainly available in most marketplaces now with all the expireds. For him, what are those 11 expireds worth? His average commission was something like $10,000. So he very well he has the opportunity to earn over $100,000. And remember with Julie and I, we researched this a few years ago. Well, one listing usually equals 7 transactions. Right away from that seller buying something or the neighbor you selling that listing to your own buyer, all these other, all the other ancillary, not even ancillary, but all the other transactions that come off that one listing. Some will come a year from now and why did you decide to list your house with me? Well, it's because you sold Bob and Betty's house when it was expired, those types of things. So 7 transactions for every one listing is what you have to look forward to. So just from that one effort he put towards expireds for the very short period of time, he does that for maybe 90 days consistently. He's going to set himself up easily for the entire year of 2025 with listing opportunities.
You can do that.
We can, and that's what we teach you guys how to do in Premier Coaching. So make sure you go to premiercoaching.com or text the word Premier to 47372. Now this next point is going to be something that Julie and I have done a ton of research on, and I'm going to do my best not to nerd out on this too much. I know nobody else is talking about this, but mark my word, dear listener, everyone's going to be talking about this probably by February or March. Everybody is going to act like were armchair experts on this all along. Julie and I have been paying attention to this next point for 14 years, okay? Ready? So here we go. The end of Fannie Mae and Freddie Mac being in conservatorship. So just a little, like I said, I promise I will not nerd out.
We'll see.
Okay, I know. It probably will. Well, anyway, so the Obama administration put Fannie Mae and Freddie Mac into conservatorship back in, I believe, 2008. And in exchange for that, again, I got to, pull myself back. But the essence of it is they were given a loan, let's call it. Wasn't really what it was. Let's just call it a loan for $191 billion. Well, Freddie and Fannie paid that back. They actually ended up paying back something like $300 billion. And Freddie and Fannie now have billions of dollars in reserves. They're two of the most profitable companies on planet Earth, a profit per employee. They're incredibly efficient businesses. And Fannie and Freddie, if you don't know what they do, they basically buy 30-year fixed rate mortgages from banks. Because no bank, the argument goes, is going to want to issue let's say the bank were to borrow the money from the Fed at, say, 4.5%, and then they loan that money to, Bob and Betty to buy their 123 Elm Street, say at 5.5%. because interest rates are going to be probably in the fives, upper fives in 2025. So the bank is going to have then obligate themselves to, basically hold that loan for 30 years if Bob and Betty own the home for 30 years at that low interest rate, where, essentially the bank is in essence obligating themselves to service that loan and have some of their own money hypothetically tied up. Well, what Fannie and Freddie does is they provide liquidity to the banks by buying and guaranteeing those loans, and then the loans can then just be sold off and the banks get their money back. And the banks will usually continue to service those loans, and that's where they make their profit. So without Fannie and Freddie, there's no secondary market for most mortgages. That's just really the moral of the story. Now, what's going to happen when Fannie and Freddie come out of conservatorship? They're going to have to start being competitive. They're going to offer more mortgage products. They're going to offer more creative mortgage products. There's going to be other private institutions that are going to compete with Fannie and Freddie. So you're going to see more mortgage products, more different types of mortgages. You're going to see more people qualifying for loans. Right now, the government, in essence, has a monopoly on mortgages. Have you thought about that? They do. Every mortgage that any of your borrowers go to try to qualify for, they're having to follow Fannie and Freddie guidelines. Well, that's kind of like always being forced to take a toll road where you always have to pay a fee. Yeah. So if Fannie and Freddie are now in the public markets, and now there's multiple toll roads, you get to decide which toll road you're going to take, and maybe you're deciding which one you're going to take based on the fee. If there are 5 competing toll roads that are all parallel to each other, and one charges 50 cents and the others charge more, can you imagine how many people are going to take the one that's the least expensive? That's the way a free market economy works, but that's not the way it's working in Fannie and Freddie. So Fannie and Freddie are going to come out of conservatorship. We're expecting that to happen in 2025. Furthermore, we're expecting President Trump to announce that, and this is maybe hopeful, but this is what everyone's expecting, he's going to announce that he's going to take Fannie and Freddie out of conservatorship within the first 100 days. He's going to have what we think is going to be a very, very aggressive housing plan, because housing ownership, essentially housing in itself is the second largest element of the GDP, of the gross domestic product. So it's a hugely important thing. So you're going to see Fannie and Freddie come out of conservatorship. You're going to see all these other different programs we've been talking about. They're going to come to reality with regards to anything to, I think, motivate people to build. You're going to see a lot of these overwrought guidelines and all this stuff that's been in the way. And Julie and I told you guys yesterday, in California, the average new home is essentially, what was it, 60 or 90,000?
90 grand in California.
90 grand more because of all the government regulation, all the red tape. And if you're in San Francisco, good luck even building anything, let alone putting a deck on the back of your house kind of thing. So that's what the government has done. It's gone too far, and Trump is going to pull all that back, because really at this point, even the people that are not in my backyard types are saying, you know what, we've created a real problem. Now, so much so, guys, there's 2 really interesting facts that are happening. I don't know if you've considered this. I think I've broken my promise to them, not nerding out on it. But the average homeowner now is like when Julie and I, and even when many of you were in your 20s, that's when you bought your first home. Maybe it was
right out of college,
Right, pretty much when you were 24, 25. Now the average age is in your late 30s. But here's the other thing that we're seeing. There's fewer people that are getting married. There's less family formation, and there's fewer people having babies. There's a direct correlation between the desire, getting married and having a family, and no longer having to live in your mom's basement. I think all of you will agree, right? Or no longer having to rent, or not having to live in an apartment complex. So housing has to become part of the mainstay of American, essentially the American dream. It still is, but it really has gotten out of reach for many people. And a lot of it has to do 100% with the government getting into housing. And I think you're going to see a reversal of that in a meaningful way in 2025.
Yeah, that's a lot to be enthusiastic for, right? So far we have more inventory coming, more new construction, so there's more choices for buyers, and soon we'll have more mortgage choices for buyers. All of this should be very stimulative to the economy, and that's good for everybody. And that may spell lower interest rates as well.
Well, we have a friend. We actually have 2 friends that are trying to start companies where they're going to, for people with good credit, they're going to go and they're going to lend, they're going to become a partner with you in your house. So let's say you want to buy $1 million house, and let's say you need $100,000 down. So they're going to either give you all of the $100,000 or half of the $100,000, and they're going to take an equity position in the house, and they're going to get a percent of the upside when you decide to go to sell the company, the house. They're essentially a passive investor that's not going to receive dividends. So when you go to sell that house, they're going to get paid back a percent based on whatever their formula is.
The percentage of investment was.
Well, whatever. I don't know how it works. Yeah. I haven't gotten that far into it. But the moral of the story is those types of programs are going to become more rampant, and you're going to see more types of mortgages and all these different types of things. So be excited about that. But if I were an active agent, I'll tell you where I'd be really focused is having that information, because that gives you a competitive advantage in the marketplace when you know things other agents don't. How many of you have learned things just from listening to today's podcast that you didn't know before? Well, imagine what you're going to learn when you become a Premier Coaching client. You know what to do. Go to premiercoaching.com. Point number 8, Julie.
Real estate commissions and agent count, stability reigns. So despite a lot of speculation in recent years, real estate commission rates remain stable. That's right.
Commission rates.
Commission rates remain stable. They didn't plummet. They didn't go away. You didn't become free. With no significant downward pressure expected in 2025. This stability highlights the enduring value that you, the agent, brings to the transaction process, from expert negotiations to seamless deal management and everything we teach you in Premier Coaching that makes you different.
The thesis that there was some sort of cabal of brokers that were essentially keeping commission rates high turned out to be mostly bullshit. Because it turns out, just as all of us have always known, that doing a real estate deal, especially on the buyer side, frankly, is an enormous amount of work. I mean, a huge amount of work. And the amount of money that agents get paid is commensurate, if not under, what their actual market value is. And that did not fly in the face of what, frankly, a lot of these government agencies thought. The government agencies really believed, evidently, that the brokerages have gotten together and all agreed to keep buyer agent commissions at a certain level. But it turns out that consumers actually want to use buyer agents, are willing to pay for buyer agents. That's the reason the commissions didn't fall. Because we're worth it. And that's the reason ultimately commissions won't fall. You'll see some agents that have, when Julie and I were selling real estate and you guys are dealing with this in your marketplaces, there'll be some flat fee brokers and some menu service brokers and all that. And you know what? They never succeed. I've never seen one of those brokerages actually succeed long term because they don't make any profit. And it's real damn hard to run a nonprofit brokerage. So real estate commissions didn't fall. Now, I'll tell you what's more. Is the same people that were predicting commissions were going to fall, and the agent count was going to be cut in half. I mean, go back 6 months. You'll know who I'm talking about. We're the same ones that thought real estate prices were going to fall.
Of course.
And I have no idea, and they never provide it, where they're pulling their information other than out of their own you-know-whats, right? So they think why? Because it was like this before. Because in your pea-brain, you think this is the way it's supposed to work. It doesn't. Because you don't sell real estate, because you don't have any real experience dealing with entrepreneurs. Getting a real estate license is not, it's quote unquote easy, I suppose, versus becoming a brain surgeon, right? But it's not easy. It's not, and you have to do tons of CE. And then working with buyers is not easy. This is a real career that requires real skill and real effort. And frankly, the idea that all of a sudden, just because it was going to become, the buyer agent commission, or the buyer agents were going to have to start, using different paperwork, that a bunch of agents were going to leave. What a bunch of hooey.
Yeah, exactly.
And
go us as an industry, right?
Well, Julie, you and I knew that even when COVID hit, and all these people were saying, oh, this is it. Half the agents are going to quit. Everyone said that. Have you ever noticed, by the way, when these people are predicting there's going to be a big, massive agent exodus, it's always like half? Why half?
It's always half.
Well, it's because there's 1.6 or 4 or whatever members of NAR, and half of them technically didn't do a real estate transaction last year. But does that mean they're going to give up their hopes of doing a real estate transaction? No. And also people say, well, when the economy is great, people don't get real estate licenses or all these other things. But they don't look at facts. They don't look at people get real estate licenses all the damn time, no matter what the economy is. If the economy is tough, people get side jobs, they get second jobs, and guess what they do? They get real estate licenses. When the economy is great and everybody and their brother is doing a real estate transaction, people get super excited about real estate and they get real estate licenses.
They get licensed all the time just for different reasons.
Exactly.
I remember a time about mid-COVID where virtually all of my private coaching clients, either their spouse, their parent, their kids, their nieces or nephews, or another, like their transaction coordinator, they were all getting licensed.
Right.
It was like everybody you talk to all the time. And that was a time where everybody thought that it would be the death of the real estate practice. And look, it was just the opposite, wasn't it?
And you go back to our friend demographics. If you look at the sheer number of, all of the generations, right? There are so many of them that are going to become hyper real estate curious as there's more inventory, as there's more mortgage products, as they finally rekindle their dream to buy a house. A lot of them are going to get real estate licenses.
Yes.
So the belief that there's going to be fewer agents is not based on anything other than, I don't know, doomsday prognostications.
Exactly.
I don't even know where. It's the same, again, it's the same bridge troll type thinking where people are expecting home values to drop.
Exactly. So step away from those thoughts, folks. All right, point number, what are we at? Number 9, the rental market. Some of you are leasing agents, some of you are investors yourselves. A slight cooling brings more opportunity. The rental market is cooling a little bit, thanks again to an increased supply of multifamily units, especially in the new construction arena. In regions like the South, renters may see some modest decreases in rates, giving them more financial breathing room. Agents can use this opportunity to guide renters towards homeownership, especially with those new mortgage products we were just talking about, leveraging the increased inventory and steady mortgage rates to help them transition into buyers. We do have a cadre of coaching clients who like to door knock high-end leasing neighborhoods and turn them into first-time buyers, because those rents were going up for a long time and did get expensive. That's now commensurate with an entry-level $450 or so, first-time buyer house. So there's always opportunity.
I'm going to throw this now. Julie and I, we're not commercial is not our jam, but I was thinking today about the effects of all these government agencies that are going to get downsized, if not eliminated, because the employees don't show up. The numbers that are coming out, it's not just clickbait. It's unbelievable how much real estate in the United States is leased by the federal government, either directly or indirectly. If I read it correctly today, I didn't have enough time to research this before our pod. The government is the second largest, if not the first largest, tenant in the United States.
Yeah.
What
Wow.
an unbelievable, enormous amount of money.
Yeah.
And so now commercial real estate, the people that own all these office buildings are starting to realize, they're starting to take account of the fact that they had a AAA tenant in there, which was the federal government, and that department that was leasing is all of a sudden going to be wiped out, going to be gone. Well, there's probably going to be some interesting headwinds in commercial real estate.
A lot of interesting space out there, right?
Yeah.
Yeah, and that'll create, a lot of opportunity. It was only 12% occupancy on those buildings.
Well, think about this, Julie. How much of that commercial real estate is in very desirable downtown
Urban,
areas?
yeah.
How many of those areas, well, you say urban, but I'm thinking more like Manhattan, and I'm
Sure.
thinking of Washington, D.C. A lot of this commercial real estate is located in these very highly desirable center city type areas. People live around where they work, and where they work is where these commercial buildings are. How many of those buildings get converted to residential?
Absolutely.
Right? So if there's all of a sudden a landlord who's looking down the barrel of essentially seeing, the Department of Education and all their little subsidiaries all around Washington, D.C. And guys, it's not just D.C. and Virginia. Again, when I'm doing this research, the federal government leases real estate frickin' everywhere.
Yeah.
It's extraordinary. But Washington, D.C., definitely that's going to be an interesting market. But all over the country, and a lot of times in the big cities, a lot of these long-term government tenants, assuming Doge actually does its thing, you're going to see a lot of redevelopment of those properties. Maybe the properties can be torn down and we can build residential. Who knows? But again, be thinking forward about where the market is headed, because it'll frankly excite many of you. Get to know your local market, get to put all these things in the hopper, and maybe follow some of these breadcrumbs, and you'll realize that that big beautiful building that's been leased forever by some department that nobody shows up for, that could be a really sweet condo conversion. There's a lot of cases that does happen in major cities.
Yep.
Or always has.
That's right. Lots of opportunity there. So point number 10 is a bit of a summary. Optimism for real estate professionals. The 2025 housing market offers a more balanced environment with opportunities for buyers, sellers, and agents alike. So in summary, here's why this year is, again, poised to be a standout. First, so there's 3 bullet points here. Stable commissions. Total commissions earned by agents are expected to surpass $90 billion, reflecting the enduring value of professional real estate services. And if you don't yet know how to create that value, how to show your value, that's why we have Premier Coaching. And the next bullet point, a growing market, increased inventory, steady sales, and appreciating home values create a fertile ground for transactions. And last but not least, we've talked a lot about new construction. With at least 700,000 new homes projected to sell, this segment offers immense potential for agents who position themselves strategically. So this is your year to thrive going forward in 2025. The housing market is more than just the numbers. We did bring you a lot of facts over these past 2 days, but it's also a roadmap to success for you, agents willing to adapt, to innovate, and to seize those opportunities. So with steady home sales, rising commissions, and increasing home values, there's every reason to be optimistic about the year ahead. So whether you're in the first-time buyer space, you're doing a commercial building conversion like we just talked about, maybe partnering with some builders, guiding sellers to maximize value, this is your time to shine. I just did some goal setting with a coaching client about an hour ago, and one of their goals is to get involved with 4 investment properties that they're going to identify. They are going to make at least $45,000 per flip, and they're going to do 1 per quarter. There's lots of different opportunity, and of course, meanwhile, selling a lot of properties.
I'm going to challenge you as a coach with that example.
Sure.
Have you ever, has there ever been a flip that you've had a coaching client do where they wouldn't have been better off to keep that property?
Where they wouldn't have been better off?
Where they wouldn't have been better off to fix the property up and rent it.
Some of the urban stuff that's a little questionable, I would say.
But for the most part, if it's a good flip, it's a killer rental.
Yeah, that's true.
And I'll say this as well. A lot of times, agents that get into the flipping business, what they end up doing is they'll sell the house and they'll make a profit, but they haven't factored in taxes. But if they were to go back and figure in all the time that they spent on that flip, they would have absolutely been better off if they just put that same effort towards listing an expired or listing 10 expireds.
Yes.
So you got to really be thinking, if you're going to start putting flips into your business plan, what you maybe want to reconsider, like the best time to sell a performing asset is never. I'll say it again, the best time to sell a performing asset is never. So if it makes sense as a flip, more expensive ones, obviously they're harder to rent. If it makes sense as a flip, chances are it's a medium sale price house. It's going to be something won't stay on the market too long. Maybe you just buy that bad boy and you keep it as a rental. Or maybe you just put that same effort towards, listing houses and then buying less expensive rentals with the profit. And we talked about that on our Wealth Building podcast earlier this week.
The point is there's lots of opportunity. Depends on what your business plan calls for. And of course, that assumes that you have a business plan.
So I'm going to even say this.
Yes.
I'm not criticizing what you told
okay.
them, but this is my own experience, right, from coaching. Is if they're focused on doing flips, it also takes their focus off making profit out of their real estate transactions. And so what'll happen a lot of times is not only does their production drop, but their production drops because they're putting more time towards the flips, but their production also drops because they stop being as intensely focused on real estate transactions, because in the back of their minds they know that they're going to have, or they're hopeful that they're going to have a payday from the profit from the flip.
Yeah, it depends a lot on the client and what their mission is and what the rest of their financial picture was.
Right.
This particular client was trying to build up a nest egg of $100,000 in 1 year, $25,000 at least per quarter, in addition to a whole bunch
What was
of
their
other
average sale
things.
price?
Average sale price is $450.
Okay, so how many houses would they have to have $100,000 in net after taxes? What state are they in?
Washington.
Okay, I know who you're talking about. Okay, so in Washington, they do, I don't know, I don't think there's a state tax in Washington state. I'm pretty sure there isn't.
Yeah.
So it's federal tax. So let's say it's a 25% federal tax.
Yeah.
So let's say they're going to have to earn $125,000 in commissions to save let's say 130 to be safe, okay? Yeah. And the average commission that they have is roughly $12,500.
That's right.
You're telling me that person wouldn't be better off just to focus on listing 10 houses?
Possibly, but there's the rest of the picture in that.
Okay, well, but it's all the things to consider, right?
Yeah.
So
this was the icing on that already happening.
If the cake still gets baked.
Yes, exactly. To your point, you can't get your eye off the ball and get distracted. We call them pretty shiny objects.
Exactly.
Especially when you have a developed business and you're getting a little bit bored. Some of these things that are rabbit holes, perhaps, can get you distracted from your core mission.
Right.
So it depends greatly on the coaching client and what their financial picture is.
I mean, since we're on this, and I'll make drill down even further.
Okay.
Where are they getting the money to do the flips?
Already have it.
Okay, they have the cash?
Yes.
To pay cash for the houses?
They're not having to earn or sell more properties in order to invest.
And they're not borrowing it against anything?
No.
You're positive they're not borrowing the money? Well, that's cleaner then.
Yeah.
But what a lot of agents will do, a lot of people do, is they'll borrow the money.
Yeah, I would never coach anybody to leverage, over leverage, borrow
Exactly.
the money, pay high interest rates.
Well,
do hard money loans is another thing they like to do. I don't like that either.
Even worse is they'll end up borrowing the money against their own home equity.
Yeah, no.
And then when the flip doesn't work out, not only are they screwed on the flip, but they're also screwed on their own home equity.
Yes, you can go, that can be a slippery slope.
Yes, I would, until you guys have until you have enough passive income coming in to cover all your personal overhead per month. And let's say it's $15,000 a month. Until you have $15,000 coming in a month from rental properties, from dividends from stocks, from EXP revenue share, until you are essentially rich where your money's working for you, you no longer work for your money. Personally, if I were coaching you, I would tell you to be very, very, very careful about getting involved in flips, because I have seen so many agents, great agents, get screwed from doing flips because who knows what the future is going to be.
You can get stuck for sure.
You definitely can.
Yeah.
So don't buy a house that you can. So if you're wanting to still do a flip, which I get it, they're exciting, is if you want to do a flip, calculate, be as accurate as you can how much money you're going to have into it at the end, and assume that it doesn't sell. Assume you get stuck with it. Are you going to be okay? Is the property going to rent? Now, okay, you're saying, okay, well, in this case, let's say, for example, they buy a $200,000 house. They put $100,000 into it. It's $300,000 wrapped up into this particular property, and they can rent it out. And let's say the net profit on this thing is, let's say, it's $300,000, and let's say they net off of it $30,000 a year, right? I mean, it's a really killer rental. Not likely, but let's just say that's the case. They're making a really good return on investment, aren't they? So, but if it's any less than that, let's say they're only making 15, it's 300 wrapped up into it, and they're only making, say 5,000 net or 10,000 net, they would have been 1,000 times better off putting that money into the S&P 500.
100%. You have to do the math on all of these.
Yeah,
and
you do.
I think the path you are going down is you have to plan on anything that you plan to flip. Your backup plan is if it's not flippable or it's not worth flipping because the market changes, because whatever, you better be prepared to keep that as a rental, and it better be cash flowing for you. Otherwise, it's a complete and utter waste of time.
What I'd rather have those clients do is I'd rather have them buy some lesser expensive homes and make them market rentable, and then keep those damn things as rentals.
Yeah.
They're going to be way better off. They're not going to make a bolt of cash, but they're going to have long-term wealth building. And when they get to the point when they're at, they don't want to screw around with the rentals anymore, which I can't imagine that ever happening, frankly, because rentals can be such a good home run.
Yep.
But then they can sell those things off, and they can take the net profit, or hopefully if they're paid off, they can take that money and put it in the S&P 500.
Yeah.
I mean, that's the thing. So long-term wealth building is really where our focus is with all of you as coaching clients. And hopefully you appreciate our thinking, because really at the end of the day, it's not a flashy, shiny object. It's not overnight get rich quick, but it is going to get you rich. And when you get there, the systems and the education and the way of thinking that you've employed and you've learned will keep you rich. And then you're free forever. Where your money works for you, you no longer have to work for your money.
Refer to previous podcasts starting 2 days ago.
Exactly. All right. So your homework for today's podcast is to join Premier Coaching. You just go to premiercoaching.com. In the meantime, have a fantastic day. We'll talk with you on the show tomorrow.
This podcast is a part of the C-Suite Radio Network. For more top business podcasts, visit c-suiteradio.com.